Ooh, there it is. We made it. We made it. We made it. Holy crap, man. Holy, what? Happy all-time high day. Happy all-time high, hopefully, to your portfolio day. Man, I got this music in the background. This is kind of bothering me. Why is that so high for me? Anyways, what's up, everybody? Welcome. Celsius analysis. Sure, we can take a look at Celsius. I will say, though, there's probably a lot better Bucker in the house charts out there, because my God, I don't know if you guys are seeing this crypto shenanigans, but but it's happening, man. I'm pretty sure that this is going down. But you know what? I think that's probably one of the most important ones we can take a look at. And man, Coinbase on a what a ripper. What a ripper. Actually, this bounce that we're having right now, I really love. So anyways, without further ado, let's get into this. Let me go ahead and pop this. Yeah, patience. This thing, talk about patience. If you didn't have patience, then it was a rough one. I will give you that. But today's payday, boys and girls. It's payday. But yeah, I think there's a lot of stuff. Yeah, Q's fine. Q's are not at all-time highs, by the way. SPY is, IWM and Diamonds actually kind of outperforming in general. So we can see why SPY's not our Q's are not exactly doing it. But you know what? They always take turns, right? They take turns. It's like mega caps go, and then small caps and industrials, and then back to mega caps. And I honestly, they're probably ready to roll. I don't think there's any shorts out there. At least I'd be hard pressed to find them. Maybe no. Maybe. This is really hard. It's a good week. But anyways, if you're new to the stream, welcome. By the way, what we do here every week is just kind of like take a look at some quick things that happened last week in terms of the economic data, maybe some headlines, stuff like that. And then we're going to take a look at what we have on deck for the rest of the week, for the calendar, kind of plan out our week, look at a couple trades. So if you guys do have trades on, go ahead and what's up. If you do have trades that you want to take a look at, go ahead and post them in the chat. I'm going to try to get to all of them. I know we're starting a little bit late. Con L, yes, 30% on shares. That is a bag. For sure. But yeah, I mean, everything's looking pretty good, right? Like it's just not, it's all good. It is all good. But let's get to it. Let me know. Can you guys hear me right? And let me know if there's some background music that, like, I don't know. If it's bothering you, just let me know, and I can turn it off. It's pretty low though, so hopefully you don't even hear it. But anyways, let's get into it, man. So there's a bunch of data that we got last week. So we got CPI, basically inflation. We got PPI, and we got FOMC minutes last week. So last week during the stream, by the way, I also said, hey, look, we've been consolidating for a very long time, and I believe that we are ripe and ready to make a run. And here we are making a run for it. So although we've had a lot of kind of consolidation, just know without even looking at charts, right? You just think about it for a second. We went sideways for the better part of 2 weeks. And if you listen to me or anything on this channel, it's always like, look, markets go three directions. They go up, they go down, and then they go sideways. And, once a market makes a run in either direction, they tend to take a big rest. And that's exactly what we got. So the market was in a resting period, and now, hello, it's in a run, right? So I think you kind of just like ride it for a little bit. If you just know, look, the all-time highs, we're going higher. It is what it is, like it or not. And if it does, Elf, I bought it, and I honestly, I'm not even really looking at it. Like, it was just so many things that were way down at the lows. And I'm like, look, these are going to turn around. Good companies, things like that don't have like major issues. But we'll see, right? Like, I think, again, market all-time highs, we're going higher. That's what it is. if you want to be a bear, well, you've been getting slaughtered for a while. And you know what? You can look back at the market too, and you'll be like, every time that the bears had an opportunity to take the market down, they've just kind of like failed. I was listening to, was it Tom Lee this morning? And he's like, previously, I think he was kind of on the sidelines, not really sure, thinking that, hey, seasonality is going to kick in. By the way, we'll go over seasonality today, but seasonality, this is an election year, so seasonality is definitely a little bit different. Is it a phase ripper? I'm not even trimming. I'm not even looking, you guys. I'm not joking. Portfolio all-time highs, whatever, right? Market all-time highs. It's all good. Yeah, SoFi's coming to $10, man. $10 on SoFi. The lenders, Affirm. It's all just ripping, right? Like it's gross. And we're coming into, and I didn't make it the thumbnail this week, but we're coming into what I believe is going to be one of the alt seasons for the records. I don't know if it's going to be like the original alt season, because look, you just can't really beat that. I can't tell you how many like millionaires were made on that alt season, but yeah, that was hey, look, if we get there, great. You guys have been listening to me. I'm usually the level to level guy. That's usually what we say. We trade level to level. So one step at a time. We don't go for the crazy moonshots. Hello, Frankie is in the house. And then Jerome, we will take a look at this, right? So I think keeping realistic expectations is important. And so if you don't know about average ranges, that is crucial, right? So that's another thing that we do every week on these trade plans, is really just kind of like lay out what is the average weekly range every week, week by week for the indices. And if you go back in time and look at all those that we've ever measured out, I'm just telling you right now, it treats you well. More often than not, we tag it. Sometimes we hit both the upside and the downside average range, but that is like definitively the best way to measure this. So anyways, let's get into this. So core inflation rate. So again, when we look at the data, what I have here in parentheses is either the forecast or the consensus number. Excuse me. Remember, markets do not move off of forecast or consensus numbers, right? That is essentially what is priced in at that moment in that exact situation. So if a consensus is high or low, that really doesn't matter. The only thing that moves markets, and this is important again as we get into earnings season, the only thing that moves markets is how far away something is from that consensus number. So really looking at last week, there's not a lot of differences in the consensus numbers to where we're coming in. So core inflation 0.2% expected. We came in at 0.3%. 0.3% prior also. That's for the month over month. The year over year, we landed at 3.3. Market was looking for 3.2, but again, 3.3, it's really not that big of a deal. And it's really just this 1/10 here that we're off from the monthly. In terms of headlines, so headline inflation, we were looking at like coming in for the month at 0.1. We came in at 0.2, which is exactly where we were before. Could have told you that one. And that landed us just slightly higher on the year over year number. Jobless claims are important, and that's what the market's moving off of from here on out, right? And Powell, reminder, Powell talked about it on the FOMC meeting. You saw it in the notes. It's all about the job market and the labor market, really. So I think we're more or less at like peak employment, but the concern is, are we overly restrictive or sufficiently restrictive in terms of the rate? And when they talk about that, this is what you need to know. You look at the inflation rate and then you look at GDP, right? So two things are important. So not the inflation rate, the interest rate, the 2-year bond yield, right? So if the 2-year bond yield is equal to GDP, that is what's called Goldilocks, and that's definitively where we are. I think we're about 3-something% GDP. We're near that, a little bit higher than that on the 2-year note, and that's why a lot of these like economists and things like that, they're looking at like, oh, we're overly restrictive. It's because the 2-year, actually, let me pull this up. The 2-year, I believe, is like 4 and change. Sorry. And if GDP is at 3, then that's significantly higher than GDP, and that is definitively quote unquote restrictive. It's going to take me a minute to pull it up, so I'm not going to. But that's what they're looking at, kind of pulling this down towards, right? Pulling that Fed funds rate, which is more or less what you look at as the 2-year bond, and getting that equal to GDP, right? So if Goldilocks' inflation is equal to GDP, that's where we are. And then the rates being higher than GDP, that's kind of like, what's the word again? Is restrictive, right? And so sufficiently restrictive, that's, I think, the goalpost needs to change a little bit. That's what Powell was saying on the last one. And that's in terms of like, do you really need to get to 2% inflation? No, not really, right? So like if the 2-year is at 4 and GDP is at 3, can we be at 3.5 and 3? Yeah, we can. And so that's, I think, more or less where we're headed. At 40, is my TNX stuck? I don't know. We can take a look at it. That's the 10-year though. So the TNX is the 10-year yield, and that's different, right? So that's more like what we call like the long bond. So the 10-year yield, I believe. Oh yes, sorry. Bond markets are closed today. So yes, the TNX should not be moving, or any bonds yield should not be moving at all, because it's their holiday. So the markets are open for us, but the bond market is closed today. So don't expect any changes in the yields pretty much at all day. So if you're wondering, there you have it. In terms of jobless claims, so we came in at 258, and that's slightly higher than last week. 230 was prior, and I think we're running on a 4-week average somewhere around like 235s, which is like perfect. Then on Friday, we got PPI, which is the producer price index. So CPI is what we got on Monday or earlier in the week. That is consumer price index. That's what your actual inflation is. Very much a backwards looking number. PPI is that producer price index. So, what are like the Procter and Gamble's or the Colgates or Pepsi's or Coke's inflation? What are they receiving? That's what producer price index is. And then, so that's a little bit more leading, because the question is, well, do they pass that any savings onto the consumer? Quite frankly, sometimes they do, sometimes they don't. But in that regard, it's a slightly more leading index. So PPI expectations was at 0.1. So for the month-over-month number, we actually came in flat, like completely zero. There will be times when we get these negative numbers, and we've seen that before in the PPI. I don't know that we're going to get them anytime soon in CPI. Inflation is technically still going up. It's just going up at a much, much, much slower pace than previously. But it's not to say that we don't actually have negative numbers in the CPI, because we definitely see it more often in the PPI, at least right now. And so the question is, does that eventually trickle down to the actual consumer? We got a core PPI number coming in for the month-over-month, 2.8 against the 2.7 consensus versus 2.6 prior, so slightly higher there. And again, core does not include things like food and energy. So they do have this thing called the super core that I believe, what the super core, which always cracks me up. It's like this new one previous week. Super core does not include, so that is food, energy, and trade. So they've taken out food and energy for your core, and then they take out trade for this current super core. But anyways, 0.1, we landed at 0.1 compared to 0.2 expectations against 0.2% prior. And then the year-over-year headline producer price index landing right at 1.8. Unfortunately, against a 1.6 prior, which is why maybe we saw a little bit of a stutter step. I actually feel like Friday was good. Friday, we were good to go. And then 1.9 prior. So other notable stuff. I mean, FOMC minutes, if you didn't catch it, really it was just more rhetoric around why they went 50 basis points instead of 25. And again, shifting that focus from inflation to specifically the job market, right? And so that's why, and this is just confirming what we already knew. But if you didn't know, that the focus of the Fed is now shifting to their second prerogative or focus, which is supporting peak or maximum employment. So it's control inflation and then promote maximum employment. Those are the two Fed quote unquote mandates. So now it's basically like we've declared victory on inflation. Now we want to stabilize the market and promote full employment. Other headlines, I mean, I don't know if this is like a thing or not. Boeing cutting 17,000 jobs, 10% of the workforce. If you do look into some numbers, like if you go back a couple weeks and you look at like our non-farm payroll stuff, there's one area of the market that has been kind of like teetering to the downside, and that is the manufacturing sector. And so this Boeing, I don't know if you know, but Boeing is a massive component of that, right? So I would expect moving forward, the services or manufacturing sector, manufacturing jobs to continue to drop, maybe significantly if this goes through. But just know, hey, look, most of that is from Boeing. So they're cutting 10% of the workforce. That's insane. Right in front of their strike, right? So they have this strike. The machinists are on strike right now, basically looking for a pretty hefty raise. I think it was like 50 or 70, something crazy. But it's Boeing, right? I think it could be negotiating tactics. We'll see. Who knows? It's not fully de-risked to me. Sooner than later, Boeing will be a buy. I just don't think it's yet. I'm waiting for the 130s personally. If you wanted to take a shot at it, go for it. I mean, I still think there's a little bit of risk, but it's heavily de-risked in terms of, where we have been in the past. So actually, where's Boeing right now? 149, 150. Yeah, I like it below here, below 150, really closer to the 130s. And we'll look at the chart, I think that last double bottom was in the 120s. So just slightly over that very last one. Everybody's congratulating. Dude, is SoFi at $10 right now? Oh, we got to capture this. SoFi, oh my God. I'm just looking at my charts. Everything's flying right now. SoFi is officially $10. Holy, we got to screenshot that. That's like a milestone, man. I'm telling you, these SoFi bulls, now these people have been patient for sure. This has been so long. Look at that. SoFi, 10, can you see that? Probably not. $10. Jeez. That's a huge milestone, man. Imagine if this holds. Insane. This is not even earnings. Like, did you think that you were going to see that? Probably not. That's the 200-week simple moving average, this purple line right here. That's a target. It's a target. There it is. Man, what a milestone, though. Right in front of earnings. I'm not selling that, man. I think this is, we'll see. This could be wild. Amit has some crazy spreads on SoFi. I think he was targeting up in here. I don't hate it. But look at this. This is like we've been saying, lenders. This is the deal. Yeah, where's Ken? Our boy Ken is the epic SoFi bull. Oh man. Yeah, if you guys get on Twitter, follow, retweet this, post the stream. Appreciate all the love for sure. Oh, Lord of Games. Patrick, you crack me up. uh, God. Amazing. What is Holly? Holly's thinking on DJT. What is this thing's flying too. Frankie wanted a YOLO on DJT. There it is. What's where are we at? I don't remember the site. I don't remember the site. Oh, DJT flying, SoFi flying, just insane. Yeah, Frankie. Sorry, man. Continuing on. There it goes. This was a little session gap here. Insane. The Jan calls. You make me look at this. I don't have Jan calls. You have Jan calls? Oh, the 2026s. I have. No, they're up 50%. Not quite. I still like it. We shall see. IV. Oh. Too funny. Yeah, 1 week DJT has just gone parabolic. You guys see Coinbase though, man. I'm just saying. By the way, if you're wondering what to do with our Coinbase here, this was that prior uptrend. Look where we're sitting on. That's good. We like to see this reclaim. We are back in the channel. We are back. Look at all these ads. Just, we're back, baby. What a ripper. We also had orange today too. Anyways, let's get out of this. Let's get back to what we were doing. All right, Robinhood. We got to look at Robinhood today. 10/16, the legend awakens. So 2 days from now, it might have had some stuff priced in, but honestly, I'm not selling this thing. I'm actually really excited for this Robinhood event. I know our friend Evan is not here, but like Evan has got, he's got actually access to the beta. So I'm excited. Robinhood event this week, 10/16. I'm telling you guys right now, they're going to release SPX 0-day trading on Robinhood. They're going to release futures on Robinhood. Crazy, right? And I'm looking at these, and they're going to release a new desktop app. I don't know how well the app is going to be. You know, I think it's one step in the right direction. I don't think it's everything, but I can look strictly at SPX trading and futures trading. And I am like, look, this is bolt on net new lines of business for Robinhood. I don't think, I just think that that's just like massive upside when that kicks in, not to mention everything else they're doing. We know they're crushing it in options. We know they're crushing it in equity. We know they're crushing it in new deposits. These are the SPX 3330. How do you know? How does he know? 3330 is happening, right? Like I'm never gonna sell this, right? I almost just for like, why not? Like I love this company so much right now, like, or at least the stock. Anyways, but yeah, I feel like if it sells off, listen, I'm gonna be excited because your boy's probably gonna buy some more if we get a sell-off event. 22 was a big level. I think this becomes like Palantir like, where we never got that close below 22, and if we get anywhere close to that moving forward, like I feel like that's it. But anyways, yeah, these are like two net new lines of businesses that Robinhood is going to be adding in very short order. So a lot of good stuff for that. There were some other headlines. I don't know if you guys caught anything like that. We'll probably. I know that the the Cybertruck event was a bit of a disappointment for the market. Listen, if you guys want to look at Tesla, we can look at Tesla. I'm just going to tell you right now, it's not going anywhere. I think that whatever lows we saw just the other day probably are the lows for a while. And I think it just bases around that. My trade, as you know, was like selling a 225 November call and buying a December 225 call against that. I'm not closing that. I think it's perfect. I think you chop right around this level, right around 200, 225, even through earnings. I don't think this goes anywhere for a very long time. So no reason to sell, number one. No reason to buy, number two. If you want to buy, you got to buy the lows. It's got to be as close to 200 as you can get. But honestly, I don't think it really gets there. I think the 215, give or take, was the low, the double bottom yesterday. Did it hit there today? Yeah, yesterday to today. Yeah, 214. I think that's it, right? But I also don't think that this goes up. So I would expect this to be completely flatlined through earnings straight up. Like there's nothing that's going to move the stock right now. So forget about it, right? Just forget about it. Yeah, Hood is looking great. I mean, just crazy. There are other stocks too that we have on that are just like, I mean, so many things are looking great. I don't want to waste my time with Tesla, and neither should you. So there's that. So what do we have on deck today? Very, 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 very light week, which is good. This means that, so we have earnings coming, right? So when we have a light economic week and we have nothing but earnings to look forward to moving forward, it's not even this week, it's really next week that we get hot and heavy. What do you think the market's going to do? There's only good things to look forward to. Whether or not they're actually good, time will tell. But that's all good. We put on a long NVIDIA trade, long swing last week, Friday at the close. And if you look at NVIDIA today, this thing's ripping, right? Why is NVIDIA ripping right now? Besides, technically, it's broken out of consolidation. But you know what? As these mega caps start to report, specifically Amazon, Google, Meta, even Tesla, who's likely to be the beneficiary of a lot of what they start talking about? NVIDIA. So I think NVIDIA has already begun to run, but is going to continue to run from here through all of the Mag 7 earnings. And then finally, they'll get to their report and they'll probably be at the highs coming into it. So the trade has already begun for their quote unquote earnings run up. But just so you know, that's what's likely to continue. That trend is likely to continue as we come into Mag 7 week next week for earnings. So we got a bunch of Fed speeches this morning. We get actually 3 more today as well. Tomorrow, sorry. Then we get consumer inflation expectations. Really not a big market mover. Look, I'm like grasping for straws here, trying to find some data. Oil status report on Wednesday. It's honestly, look, it's not really a big thing. The only thing that we have that's like some worth watching is really this retail sales and jobless claims on Thursday. Remember, the Fed is focused on the labor market, so jobless claims are important. And retail sales also really important. So retail sales, as an aside, has not really been moving the market. I mean, you'd have to really be in the weeds to figure it out. But I think from here, we can begin to see this really start to move markets even more. In terms of where we are on the calendar, it's mid-October. The eating season begins at the end of the month. So happy eating season for Halloween. We get Halloween, we get Thanksgiving, we get Christmas, and then we get New Year's. This is the eating season, bulking season. But it's also Black Friday and all those other events. So in terms of retail, this is actually, you want to be long. I think you want to be long the consumer, right? So that is like still like your best buys. It's had a little bit of a run, kind of pulling back today. Really not bad. Potentially, look, some things that are getting kind of interesting. I'm not gonna lie, Nike's still interesting. I think we saw the lows. I think we saw generational lows, but it takes a while for a new CEO to really like rein everything in. But I think that any decent dip buys on Nike sub 80, I think you would buy those. Not for a short time, but for a long hold, right? As we get into like transformational kind of journeys for companies, things that have been pretty much beaten down, but honestly, Nike has not lost a lot of market share, um, or revenue rather. Like they're potentially beginning kind of like that turnaround story. So there are a couple of companies like that I think you can look at. They're not necessarily like explosive, ready to roll, but I think the bottoms are in. So if you're looking for at least areas where you could probably hide away for a little bit, that's definitely one if you're worried about all-time highs, things like that. And then housing starts on Friday. So I know if Frankie's still around, like some of the housing, XHB is the ETF for the housing sector. Look, people like to say semis lead. I'm just telling you right now, the housing sector tends to lead right now. And they're rippy. That's like your Toll Brothers, even as I know some people, Redfin. I don't even know what is RDFN. Probably balance area, like Home Depot. Look at this. Near all-time highs, probably going to extend, right? There's an annual trade that we do in Home Depot that doesn't begin till like late December. But there's this crazy stat. It always hits that if you buy Home Depot, like towards the end of the year, by January and February, you are up pretty significantly, like 99% of the time. So just so you know, the dips on Home Depot, whatever they are, they're buyable. Yeah, so that's kind of where we are. I think the housing stats will be interesting. I just, the longer term bond yields, I think kind of front ran a lot of rate cut expectations coming into the event. And then now that they've kind of been set right, I think those will begin to revert back to the mean. So I actually like home builders. So I did say we're going to look at seasonality, but DM'd me a question earlier. What was his question? So his question was, how does the seasonality chart match up with buying Yom Kippur on election years? So if you guys don't know, there's this saying, sell Rosh Hashanah, buy Yom Kippur. And how does that stack up with election years? Actually, it doesn't really stack up that great. So one, we know, and so the chart that you're looking at, this is courtesy of Fraggle, actually. But I like it, right? So on election years, which is the fourth year after the last election, so there's a 4-year cycle in the market, all markets mostly. This is the last year of that election cycle. So inside that last year 4, this is a typical seasonality. So this is like 50 years median average. This is what we're looking at. And so what we see is that, this is like the sell Rosh Hashanah, buy Yom Kippur here. I think, and Frankie even asked me earlier, what's up, June? Frankie even asked me earlier, do we sell Rosh Hashanah and buy Yom Kippur? And I was like, no, I think we just buy Yom Kippur. So that's kind of where I am. If we get a dip, here's the situation. So if you notice on this chart, you tend to get a big dip right in front of the actual election. And this is like if things get kind of like you get a run up into, and then you're really not sure, and then the election happens, and boom, you're off to the races. The question this year is, well, is there going to be a lot of fighting after the election? Are we even going to know who won on election day? We're probably not going to know who won on election day. So I think this dash line is election day. So it might look a little bit different this year. Let's say if Kamala technically wins, is Trump going to do anything? or vice versa, probably. So it may be a little bit pushed out. I don't know. To me, so right around the actual election, which isn't for like another month, um, we can get some serious volatility. But between now and then, listen, I think you can kind of stay the course, but have cash available to buy any kind of major dips. So I think if I were to leave you with anything, that's really like the sentiment. Hey, look, there's a possibility that we get a dip right ahead of the election. It's going to be fast. It's going to be nasty and aggressive if it happens. And you know what? If you didn't even turn on your computers though for like that week, you probably wouldn't even have noticed it because it's going to get bought up equally fast. So just know, hey, look, it's potentially there. So have some cash on the sidelines. Know what you want to buy. Get your shopping list together, because you know what, this is it, right? So whatever dips we get, this is the opportunity. So, anyways, look, we're we're going higher. That's what I can tell you. That's that's the deal. We are going higher. If we get dips, it's all by way. In terms of earnings, so we do have earnings season technically kicked off on Friday with JP Morgan and a couple of the other banks. Wells Fargo, actually pretty good. We have Netflix hitting the wire this week, which technically kicks off tech earnings season. I haven't shown this slide in a little bit, so I do track the Dow 30, so the 30 largest components in the market. Last quarter was not bad. It wasn't the greatest. So greatest of all time was Q4 last year, 29 beats, no misses, and one just meeting expectations. Never have I ever recorded anything like that. And then we went 28-2, also really good. 25-5 last quarter. So this is actually so weird, right? So like actually lower, like the trend is going lower in terms of companies that are beating, but yet the market's still going higher. So as long as expectations are kind of like decent or not too overly optimistic, which in some sectors, let's say Nvidia and things like that, but they might be a little stretched. But again, this is the Dow 30, so it's not all of those. But anyways, that's the only area I would say maybe. Are we not in 1080p? I don't know why we wouldn't be in 1080p. Wow, we are in 720. Goodness, I will fix that for sure. This is Restream. They're updating their software. Maybe I'll switch to StreamYard like everybody else. But we did get JP Morgan, who did beat last week. And then this coming week, this is who we have on deck. I have no idea. This is Karoo. But typically Mondays and Fridays, not a lot of earnings that actually hit the wire. Next week is the heaviest week, and then the week after that. We finish off the banks out of the gate. We did get Delta last week as well. So we get the rest of the airlines coming in hot. Like Walgreens, Boots Alliance. I expect nothing good from this one. So if you were to pick a short, that's probably the one. Sorry. Bank of America has been underperforming, but we get healthcare kicking off tomorrow morning with United Health and J&J. We get some of the insurance companies, and we're finishing out the financials. So the big financials. So Bank of America, Schwab, PNC is the regionals, Morgan Stanley next on Wednesday. So in terms of the banks, it's interesting. So net interest income was decent. I think better than what they were expecting, but I believe the standouts were really like the non-interest income. So the we call money setters or banks that have trading stuff. So Bank of America does own Merrill Lynch. That might actually be a good one. Goldman Sachs specifically, and then Morgan Stanley. those will look good. When SoFi, Judy? SoFi is today. When is SoFi's earnings? I don't know. It's probably next week. But man, SoFi, the move is today. That's for sure. Is it still hanging up there? $9.99. Look at that thing hanging there. When was the last time we saw a 10 handle on SoFi? Can you even remember? And did it even stay there this long? I don't even remember. That's just wild. Congrats. insane. But yeah, I think this is where so Netflix, so TSM. Somebody wanted to look at that. We can take a look, but if I'm going to look at anything that does have earnings, what I'll tell you guys is that I'm going to give you a little bit of an edge, and I'll do one step further. I'll actually look at what the average moves are on these things, so you can have a better idea, and I'll show you how I do that, so that if you are looking for some kind of earnings trades, I want you guys to understand what good risk reward looks like and what's most important that you need to pay attention to when it comes to options and things like that. If you're assuming you're trading options. December, is that for SoFi? SoFi earnings December? I mean, if so, that's a ways out. No, 1029 SoFi earnings. Qualcomm, gotcha. So Judy, 1029 pre-market SoFi earnings. All right. Well, you guys, we got to do one thing before we actually jump into the charts. So let's go ahead and check in with Miss Cleo real quick. Let's do that. Definite apologies on this one. I got a really blurry screenshot today on this one, but I know these are wands. This looks like a 4 of wands. Today, if Emperador is around, today is the Emperor. Then tomorrow is I believe that's the Chariot. The Chariot, the 5 of coins, and then we have a Queen of Cups and a Page of Pentacles. So Emperor, Chariot, Queen, Page. That's a lot of big move. A lot of big stuff there. So let's go ahead and take a look at this. So for the week, so first things first, so we get a theme card for the week. That's like the general theme. And then we get a daily card down below for each of the individual days. She's been doing pretty good. Let's see if she can keep the streak alive. I think that's what we all really want to know. Can she keep the streak alive? It's going to be tough, man. It's going to be tough. So theme card is the 4 of wands. We had a 9 last week and now moved to a 4. So, okay, this means we could be stepping backwards or possibly starting something new. I mean, I don't know, Miss Claire. We'll rely on the daily cards for that. I think it just means like not as impulsive, huh? Here I go interpreting. I'm not Miss Cleo. I do find this card tends to touch support before launching a decent rally. Sometimes the support test happens overnight or the day or week before. So my expectation is a slow start. This is not a slow start. Maybe some consolidation with a decent finish to the week. Don't forget that this card comes on the heels of last week's tower, which has yet to fall. Oh yeah, the tower is yet to fall. Still, this card skews positive. I mean, we did have a huge start on the Qs, and we got a pretty heavy pullback. I don't know where we are. I think that was just the Qs. Heavy pullback, actually, already, and then bought right back up. Still, this card skews positive, and when red, it's barely so. So this means we can likely buy dips throughout the week. Yep. Sounds good, Miss Cleo. Let's see. So today is the Emperor. Emperador's day. The Emperor rules with an iron fist, bringing structure and rigidity to the markets. That doesn't mean we can't trend, because he can. It just means that there's less funny business and more predictable price action. Yeah. Skews bullish and can often trend in that direction. The theme card says we touch support, but we can likely buy dips here. That was definitely the space at tower. What a catch. The worst case, probably finish flat. All right. So not anything crazy. Big bounce, big push this morning, actually. So Tuesday, tomorrow is the Chariot. Back-to-back major arcana has been a common thing of late. This has served day traders well and has continued to lead markets back to all-time highs. Chariot skews red usually, and usually mean reverts. So if Monday is positive, then we probably see a red close Tuesday. Okay. Fair. Treat it like a trend card tomorrow and chase momentum. Chase momentum. All right. So Miss Cleo says mean reversion Tuesday. what was it? Turnaround. She says turnaround Tuesday. All right, I can get with that. Let's see what happens after Tuesday. So Wednesday is the 5 of Pentacles. We're suffering out in the cold, frail and injured. Oh, is this a really bad Tuesday? Wishing. All right. Well, just note this. Miss Cleo says that tomorrow's turnaround Tuesday is going to be brutal. We'll see. And then Wednesday, we're suffering out in the cold, frail and injured, wishing that things were better. However, there is help just around the corner if we simply stop and take a look. This one almost always finishes in the red also. So we're selling rallies here. We may try to bounce after lunch, but likely get rejected or fail to earn back to flat. So it's a midday pivot on Wednesday. I found my future wife, Miss Cleo. Oh, God. What if it's a dude? What if Miss Cleo's a dude? All right. The Thursday is the Queen of Cups. We should be familiar with this card. She shows up when we're feeling emotionally down or torn or worn out. Well, it sounds like you'd be worn out after the first 3 days for sure. She keeps us afloat and helps us maintain stability, keeping the bottom from falling out. All right, so Thursday is the bottom, or maybe Wednesday is the bottom. We don't have much data on this one, but it's unlikely we'll see a positive trend. I don't think we'll see our uber bearish price action either. I think it's more likely we chop around and kill option premium. Gross. All right, so Monday upski, the tower is built. Oh God. Miss Cleo is saying that we're just gonna dump it. Turn around Tuesday, finish it out on Wednesday, chop Thursday. Let's see what Friday has. Is the Page of Pentacle. Though pages love new starts, this one prefers continuation for some reason. That means there's a high chance that Thursday's dominant energy persists into the weekend. There's hope for bulls as this card skews to the upside. All right. So typically, it's funny in bear markets, you have like the whole like bulk of the week is actually red, and then Fridays are just like these face ripper rallies sometimes. And in bull markets, that's bear markets. In bull markets, it's kind of opposite sometimes. But anyway, so Friday, there's hope for the bulls as this card skews to the upside, usually closes up or about 0.5%. That's not anything crazy. Miss Cleo thinks 0.5% is trend. I don't know. Notice that this card's background is yellow, and each card this week has a hint of the same color. Oh, this is especially true of the Chariot with lesser tie to the 5 of coins. I'm hearing gold, hints of gold. If we start similar to Tuesday, then Friday may become a similar version of it. Otherwise, just play continuation from Thursday. I like that. Hints of yellow. Sounds like gold. I have a gold thesis right now. We'll take a look at it. So the recap. My gut tells me we start strong and fade along the way, but the theme card usually prefers the opposite. So this will be an interesting one to watch. We have something for everything, this week. So it should be a good trading environment. So yeah, that didn't really give me much. So she's a lot of choppiness for sure. She's definitely calling a turnaround Tuesday. Maybe fading today. We'll see. There's just, like I said, there's not a lot of stuff on the deck. I think it was Thursday. Was it Thursday that Thursday after the close? So if Friday is a face ripper, Thursday before the open we get TSMC. That's a big deal. And then Netflix after the close on Thursday, which would mean that she's thinking that's bullish, because I will tell you, this kicks off the major tech move. So interesting. I thought you said it's Queen of Cups. She did say Queen of Cups. So what happened? Yeah, Thursday, Queen of Cups. Yeah, Thursday is Queen of Cups. And then Friday is the Page of Pentacles. 5 of Pentacles, Page of Pentacles, and then the theme card was the 4 of Wands. Wands are, I guess, impulsive. Casey and Likely liked SMC in the morning for next week, but it dropped hard and keeps dropping. I can take a look at that. Tell you what I do like is coin. Oh, you know what, you guys? Do you want a little something, something? Did you know that Miss Cleo does crypto readings? Do you want this? If you're in the server, we do this. I'll just say I don't think she's not not much different. But yeah, this is a 4 swords theme card. Oh god, is that a death? Is that death on Wednesday? Oh, queen to king to death. Holy sh! What? Oh god. Crypto, 4 of swords. Crypto is set to take a bit of a break this week. Little action. I don't think so. Negative bias. Oh, so we're likely selling rallies. What was Monday? Sort of sharp with his cunning. Tuesday, king of wands. Strong dude, most impulsive of the wand suit. This means that we can expect fiery price action with squeezes on down moves and sudden selling during rallies. That's a lot of exhaustion. Treat Friday, Tuesday like a trend card. Look for higher lows, lower highs. Chase momentum. Wednesday is death. Pretty strong card that implies death and rebirth. Death and rebirth. It's time to kill the current trend. Miss Cleo straight up calling the crypto trend over on Wednesday so that we can start fresh. Okay, fine. Look for main version here and the opposite direction of Tuesday's on and treat it like a trend day. Okay. I can actually get down with that. Thursday. 8 of Pentacles, grinding away, doing a slow and boring work it takes to be successful. Chop, especially with the theme card. Chop Thursday, Friday. Start new journeys, but generally lack the energy to see them through. This carries a message, usually as a result of economic or Fed news. No? We don't have any of that. As it happens, we have some home builder. Yeah, no. Why is Miss Cleo like trying to pull in like that, like stock data into crypto? I don't understand. Maybe she got these mixed up. Brings continuation. Anyways, chop. Lot going on between like primarily expectation is chop with potential weakness along the way. There's a few trend days mixed in. It's pretty much the same, guys. Pretty much the same. But let's get to it. I think this is epic though. So I can read. This is my Coinbase chart. That's me, Jill. So Coinbase, this was, if you didn't know, like we've been watching this level. There is so much confluence, but it was not easy because it looked like, how many times did it look like Coinbase was going to fall out of bed? But finally, I'm just like, no, it's not. And actually, it was the Bitcoin chart that told me. And if you're in the server, you knew. Let me see if I can. Is this the right one? I know we have one of our charts. Maybe it wasn't this one. So we have a higher high, higher low. This was the last lower high or higher low. So it was like, where could the last low be? Literally right there. So this was the last higher low. Anything in this box between this high and this low, between here and here, is where we wanted to see Bitcoin defend. And specifically right in here, this is what we call like a fair value gap. Also, boom, right over there. And here we are. So this is, by the way, this is the major trend. We're at a pretty important fair value here. I don't need that. This 69K is the all-time highs. This is, I believe, the point of control for this consolidation. All that's kind of like for naught now. We are in it. So what happens? Technically, we do not technically have a new high on the Bitcoin, just so you know. We do not. So don't get too excited. And this is where I could probably get with the program on Miss Cleo. But here's the deal. If we lose just this little area here, 65,492 on Bitcoin. Let me just give this a little bit of slack. Let's call it 65,250. Call it 65,250. If Bitcoin is failing below 65,250, we're going to make another higher low, and then we're still in this consolidation. I've been saying that this is going to be a back half 2024. We are here, and we're going to basically, I think this is what I would expect. Just a little bit more consolidation to finally break out. This is like later, right? Like I think honestly, like Halloween typically. So if we get one more pullback, I think this is the one, right? I mean, this was the one for sure, this higher low, but I think it's like last call. You get one more pullback. So I don't expect, what I will say is I don't expect a big pullback. I do not. So whatever this pullback is, I think it's essentially the last call, and I think it gets treated as such. So I think we hold this 200-day simple moving average around 63.4 or 63.5, and that's where I would expect this to start getting bought up, right in here, if we do get that pullback. So it would look a little bit something like this, and then ping, and then one more, boom. I honestly just like this. So I don't need this to go today. If it does, great, right? Watch oil. We can look at oil. Oh yeah. Did we get rockets just now? Are they launching? Oxy, I'm in, baby. I'm not selling that. But here we are, Coinbase. I love this, right? So I love the fact that we are reclaiming this trend. So to my point, if we lose this trend, so call it this last pivot, and really this session gap right here, then I don't think this is a sell. So I'm already out all my principal. I'm in it from here. We're gonna run into this like pretty key area, and hopefully Coinbase, and this is where we are in the crypto space. If the total crypto cap, which is here, continues to extend, so like this hasn't really gone yet. This is not as bullish as Bitcoin, but if this holds stronger, and this is what we've been saying, then Bitcoin, like your Solanas, your Avalanches, we just went on Solana 135 to 150 and change real quick. I think if this guy holds, Solana holds, let's say 150, while Bitcoin pulls back and then continues to like grind, I think we're on our way to that 200 plus, maybe even a lot more, 220s, 250s. And then Avalanche, this is my pick. We can pull back, I think, a little bit, couple bucks. I like right in here on that 20-day, 2750s is what a pullback would look like. And I think last call, if you're not already in, I think that's a low, but we consolidate and then rocket. You know what I saw the other day? I saw last night, I was like, Link was sub 11. I was like, I kind of just have to buy this. So I did. When Link? I don't know, but that was looking good. Short-term Miss Cleo. Anyways, back to coin. So that's where we are. If this pulls back, then I don't expect anything crazy. I just would expect this 50-day simple moving average, potentially a gap fill, but that I don't even think that much. Here's the deal. This gap will fill. You can't really say much. If it's under the 50. If it's under the 50, then it probably will fill. That's like right at 79. But it's only a couple dollars below that, so I don't even know that that's even worth trading for. I think that in the meantime, we get to that 200-day and really this consolidation area right here. So 208's max, I think it was 202, was really what I'm looking for on this push. And that's just taking this consolidation, price of interest, point of control rather, aligning that with a little bit of a fair value gap right here. 202.66 also aligns with the 200-day simple moving average and aligns with this volume shelf right here. So that's where I think we get to, and then we definitively take a stall or a pullback. And that pullback is likely one more higher low that looks like this. One more day, day 3. Can we get here? Sure. And then pull it back here and then chop and then go one more time. Something like that. Don't quote me. But that's exactly what I think that we're going to see. So what does that mean? It means like there's still more to go. And I want to reload on this next pullback, even with Coinbase. Thoughts on algo? I like it. Do it. Absolutely. Yes. Qualifies. Hyperscale. Layer 1. Go for it. Yes. Simply stated. Yes. Anyways. All right. So a couple others. I know active trade here. Some of the guys are looking at this. I'm not selling this. I think we cracked 300. This is just a clean flag at the highs. Over 287, by the way, was that prior earnings breakdown, prior consolidation high. We are going to all-time highs on CRM. No ifs, ands, or buts to me at all. So as long as this is good, we are good to go. This is 1, 2, 3 sideways action. We should be ready to rip this later this week, regardless of what Miss Cleo says, whatever. But that's usually how it goes. So like 1, 2, 3 days consolidation and then kaboom, right? And then this is 1 day consolidation. And then 1, 2, I think we're good. 1, 2, 3, boom. This was a little bit more. So I want to see this extend to 94. Excuse me, 294s right in here. Here, this is a big deal. To get through a low, that's going to put you right at this consolidation low. There's a little bit of a session gap at 300s, and then 310. That's a couple weeks. I think that's where we go. All right, let me scroll back up and take a look at your requests. Let's see. I'm in con out. Yes, so con out for sure. Look, I was thinking about, do I detrim? No. Right? That puts this right around like, listen, 34s on Connell. That's still a lot of percent away. That's still another 20%. Just to get where I was looking for on Coinbase. That's good. Let's see. Evan and Wolf are heading. Oh, that's probably to the Hood Summit. Yeah, Hood. Let's take a look. Right, so Hood. So 33, if you don't know that, I believe that was the IPO price. IPO first trade, rather. Right over here. Yeah, so 33.25, give or take. That's this IPO first trading session low right here. So that's where that number comes from. I mean, we definitely stall once we get there. 28 was kind of like the thing for everybody. We're basically there. We're gonna have some not tomorrow, but the day after tomorrow we have this event. Does the event become a sell and use event? That's what we don't know. We'll have to see. This just standard extension takes me to just under 30 right in here, which is always kind of like what I was thinking. So can you get to 33? It probably sucks it right up in there. But look, guys, we're in like uncharted territory. This is a very big low volume pocket. Really, it's from here. Let me zoom in on this a little bit more. So this is from 33.75 to this area right here. This is 23s. So we have a little bit of a stutter step right here, 29. So 29 is really like, near term. And then I want to see it hold in 26s. So this is how this is going to work. It doesn't even have to be like 26 hard. Definitely 25s. So 26s, I'd like to see hold 26.50s. I'm just pulling this little consolidation area. And then here we can pull it straight across. So of this last consolidation on the daily, including that nasty bear market of whatever these 3 days were. Look, if we get a 3-day sell-off like this, just be around, be ready to buy that. But that puts you right in that 29s. 28 plus was like that, primary target from this standard consolidation. Just 29, 22. 29, 22, right? As long as we're holding this 26.50 right here, that's where we are. That's today's low and Friday's kind of high. So right there she be, 26.50s. So I like this level. Look, higher low and higher highs. You can't really argue with this one. It's just a clean channel up. This looks good. I'm just saying we got the news day after tomorrow. Can we get to 28s tomorrow? Can we get Robinhood at 28 tomorrow? I think yes. So that's fair. And then make sure that you take some profits on any option trades because you'll have some heavy IV coming in. So just be aware we're going to get some IV burn after that event and then again after earnings. So yeah, I think 33 fast, but here's the trajectory. I think we get this kind of stuff. Boom, right? Can we pull back something like this? Whatever. And then can you get an earnings pull back? I do think so, or an event pullback, but I think we come all the way back up like this. So that would be somewhere in that 25, high 25s, this area right here. So on whatever pullback we get, I want to see this defend ideally. For me, look, I think it could pull back as far as here, and I'm happy. I would love to get an opportunity to buy in this consolidation again. I don't know that I'm going to get that. That's the 22s. I don't know that I'm going to get an opportunity like that anytime soon. This looks like it's like long gone. But yeah, if we have to hold 25s, ideally that holds and this becomes the last dip buy. If that fails, if and only if 25 fails, then we can look at 22. But between now and then, man, I don't see 25 not holding, honestly. And 22 would have to be on like something really bad would have to happen. Maybe it does. Maybe it's selling news. But yeah, I think that is the trajectory. But yeah, I do believe Hood looking great. So next up, CrowdStrike. So CrowdStrike, we looked at this. I think this was a buy. You had really big volume shelf that actually got created. It was 270, right? So at 270, you were like a foregone conclusion that, hey, look, you're going to 300. You actually went beyond 300 to 320. And you're coming back in to retest the 200-day hard right now. So this is the session gap from Armageddon right here at 345. Look, I think this makes its way up there. This is getting choppy, to say the least. So the buy to me was like the best buy was at 275s. We'd outlined this prior. And you retested essentially this whole zone right in here, which had some confluence all the way back over here, right? So this is done now. I think that doesn't really come into play. At least it shouldn't come into play. And if it does, then it's a little bit more concerning. But I think you could undercut 300 just slightly. And so when you're in and around a 200-day simple moving average, that's this red line here, there's a couple things that you need to watch out for. So all stocks get extremely choppy around these types of SMAs or simple moving averages. So I would expect some serious consolidation here. You definitely have this low volume pocket that this blasted through. I think it was on Delta's call. There's a couple notes out. You could argue about why it was bullish for Crowd, but there were a lot of reasons why it was bullish on Crowd on the Delta CEO's commentary. That said, I think what you're looking for is probably this area to hold and fill, likely. Do you trade for that? I don't know. But what you're looking for at this point is like you're looking for this hold, and then you're looking for a higher low to show up after a little bit of a break in structure like this, and then go, right? So I think you're looking for a little bit of something like this here, maybe potentially just slightly undercut it. Does this make sense? Like this. And then when you get a higher low, so low, lower low, high, higher high, lower low after breaker structure, above that 298. So if you see a higher low above 298, boom, go for it. That's what you're looking for. It could be a 3-day in the making thing. So for now, I don't think this goes anywhere. At least, when I say now, this week. Unless it just continues on, right? Like the only other situation here, this could bounce, but I would be really cautious because this could be putting in potentially a lower high to do that. Does that make sense? Whatever that looks like. So just be aware, if you get something like this, that's a lower high. This is Miss Cleo's turnaround Tuesday. And then you have a better dip by probably Friday, if that makes sense. Probably Friday, below the 200. Essentially, like just slightly undercutting 300, coming back up through 300. That's gonna be the buy. All right, TSM. So I said I would look at some other stuff. TSM. Look, this is not a daily driver for me. This is all-time highs. Does it break out of all-time highs? Probably not, but let's see. So what we do, I go to this free site, marketchameleon.com. And then TSM is the ticker. We pull this up. Whoa, TSM. And then on the left-hand column, there's this thing called earnings. It's tabbed. And then go to release dates. I'm just going to pull up a calculator really quick, because it's going to show you the last 6 earnings moves for free. And what this is also showing you, aside from the last 6, and listen, I'm not signed in, I'm not subscribed. It says, what was the implied straddle? So how much was the option market pricing in? And then how much did the actual underlying move? So you can see on this one, the last 2 times you got burned if you're trading TSM, and it was really only 1 out of the last 6. So this is burn. This is actually probably close to a burn. This is definitely a burn. This one, 3 quarters ago, they doubled. That's not a burn. So 1 out of 6, that's your odds right now. Doesn't look great for being net long. But let's do this. So what we're going to do is we're going to take the last 4 or the last 6 moves. So 0.4%. I'm going to take 0.4. I'm going to add up every one of these. 4.9. I'm not going to differentiate between up or down. 9.8, 3.7, 5.1, 2.4 equals, divide that by 6. The average move on TSM is factually 4.38%. So just under 5%. It's a $200 stock, so that's probably like $7, right? Right now, to figure out how much the options market is pricing in, you add the at the money call plus the at the money put together. That gives you the implied move. I'm looking at $9.90. We just kind of factored this is about a $7 average move. These are slightly overpriced. So the odds are not in your favor to trade TSM, period. So I would not be trading TSM just based on that fact alone, and that is not a guess. That is factual statement. But so that said, you want to know what to do. So from here, 7% to the upside, right here, is about 205. 7% to the downside is basically that 20-day simple moving average at 178. So the way you'd have to look at this is like you'd have to, this is not the greatest. You'd have to get something somewhere, a strike, essentially somewhere in between these two. If you wanted to have a directional bias, let's say you had a directional bias for 200, right? You'd have to pick a $200 strike, and you'd have to hope that this gets to 205, and you'd have to pay less than $5 for that $200 strike, if that makes sense. Currently, they're $2. So maybe if you get to 205, you get to $5 and you're looking at a double. That's not the greatest risk reward, but can you make money? Yeah, for sure. Conversely, let's say if you wanted short side, and you have to also pick the direction, right? Which I'm not going to pick this. You know, call it 185 to the downside. And if you get to 180s or slightly below, that would be ideal. So if you can get like a 185 strike below, I don't know, $1 a contract, maybe that's okay. Maybe that's okay. That would be the only way for me to really do it. So just know what I'm doing is I'm looking at how much are you putting out for the premium, how much you outlay on the premium, and then really think about what is that, what's the word? Wow, somebody help me out. Intrinsic value of in the money value, intrinsic value, right? So how much is that going to be worth once it's in the money? So intrinsic value versus the like estimated intrinsic value versus how much I'm paying for the premiums. That's the deal. Okay, cool. That's TSM, RX. I don't think so. This is one where I probably wouldn't do. Recursion farms. I don't know anything about this. I thought you were thinking royalty pharma, RPRX. Like these things. If I don't know what that RXRX is. I'm just looking at what do these guys do real quick. Yeah, I don't know enough about this to do anything. Has it broken the downtrend? No, it has not. It's still lower highs. So what you need is you need to have a higher high above 75. Like it's maybe super near term. So like this last high for sure. But it hasn't really gotten through here. So like if this, God, this is penny stock. I don't see this. Like I guess if you're gonna trade for this, what are you trading for? I gotta know more about this. This is looking like it wants to, but I would not be comfortable personally until it's over 750, and then looking for if it cracks 750, then I'd look for like a $7 entry somewhere in here. Personally, you're close. So like, the thing is, if this locks another higher low, can this get there? Yeah. And then I'd look for something here to go. That's what this looks like. Then I could say, okay, your trend is broken. Can we long Celsius? I'm long Celsius, man. All right, what can I say? Right, wrong, or indifferent. Boom! In the buy zone, baby. In the buy zone. Look, this chart has not moved for a long time. Yeah, I'm long. I'm long and strong. That is what it is. Right, wrong, or indifferent. I'm here. I'm in it to win it. God, earnings around the corner. God help us all. I have no idea. I have no idea what's going to happen in terms of earnings. No clue. But I like to drink sometimes. Let's see. Let's do the same kind of thing. So get out my little calculator here. Oh, this is a big mover. So definitely not worth trading either. Not usually this low, 2.4, 1.8. So I'm just adding up the last 6 quarters of how much they actually moved. And again, then I'm going to take that total. So it moves on average 11%. Notice I did not differentiate between up or down. I could care less. That's totally speculation. If you're going to try and pick a direction, good freaking luck. You're high. All you can do is define your edge. So 11% on average. which means that if the options market is pricing in less than an 11% move, then it's fair game, right? That means that it's underpriced or at least perfectly priced. If the option market is pricing in more than 11% move, so Celsius is a $34 stock, right? Let's say 34 times 1.11 minus 34. It has to be pricing in less than $3.74. So how do I find out how much it's pricing in? I have to add the at-the-money call plus the at-the-money put. It's currently trading at $34 even. The $34 put is trading at 1.07, and the at-the-money call is trading at 1.15. $2.22. So it's less than $3.74. Right now, Celsius is underpriced for an earnings move. That's all I could say. But that's how you would do it, right? They don't have earnings for until November 7th. So you do that exact exercise on the night of earnings. That's how you figure that out. But yeah, no, we're not out of the weeds yet. We are stuck inside these two simple moving averages, inside the 20 and the 50, right in this little boxaroo. I think that's where she sits for a minute. Let her breathe. It's a nice pop, but I think it was a lot of short covering, quite frankly. A lot of short covering on Celsius heading into their report. That makes a lot of sense to me. I'm just going to pull up this short float. So last time I checked, it was 12.8. So short float is not really changing a whole lot. If this was at like 30s earlier, yeah, nothing crazy. Do we have any major? God, I hate this. Downgraded. Bye. And I scroll all the way down. So we have CEO has stopped selling on the last one. So this was an option exercise. They sold, and the exercise options. He hasn't sold anything since mid-September for the last month. So, I mean, if he was going to sell, he'd probably be selling again. I don't know, unless it's a blackout grade. But that's where we are on Celsius. I think you might get another little short squeeze into potentially that earnings event. So good luck to you and good luck to me. All right. Volume again and type of website. Yeah, that's all right. Let's see. When is SoFi? You have CRM. We did. Okay. Jerome, if Jerome's still around, Qualcomm. Ooh. I mean, this looks like Dell to me. Qualcomm and Dell look very similar. So this is a potentially nice find, dude. I like this chart. Qualcomm earnings November 6th. I like this chart, man. So I think that we might get a lot of these semi run-ups into their earnings. So earnings November 6th. The chart looks bullish. 64,000 calls to 18,000 puts. IV percentile is a bit high. 81st percentile. Now I'm going to go into largest block trades. Biggest order. I got to stand out. I have one standout trade. I don't know that I would take it though. It is a November 15th 175 call. That was just slightly at the money. And so they do report earnings on November 6th. That is 1 week past earnings. I think you're okay. Oh, I see what they did. So they have, they're selling. Oh, why would they do that? 175 to 220. So I don't know. Maybe somebody's YOLOing some 220s. Here's the chart though, right? So as long as we're holding this like area, I think you're okay. My only concern is like when you have this stuff, it's possible that you get this little extension, pull back right into this, and then you're good to go, right? So ideally, that's what you're looking for. that would be right in this 173 area. So you'd have to catch it as it's going up through 175. But right now you're over 175, and it looks like it wants to rip right here. You need to be very cautious. 177 is a big deal. It's a big deal. Man, does this put this at a specific market cap? 200 bill. This is not one where I would want to go long right now, just because of where it is. Like, this is probably setting up like for the next few moments. I mean, it's gonna be it looks like it's happening soon. I would just be kind of cautious about front running a breakout. Although you do have earnings, I would probably play this with less time. If that makes sense. I would not buy that much time. Like 2 weeks, maybe. Yeah, like those 180s for next week. Yeah, I like the 180s for next week if I'm going to take that. But like, this is why I'd be really cautious, because you're sitting on it. So then you'd have to drill in. Maybe you get this extension, right? Like these green kind of hue right here, that's an average daily range. So you're beyond an average daily range on Qualcomm right now, which means that IV is adjusting live. So your premiums are very juiced at the moment. I'd probably wait for this tomorrow to see if it retests here and holds that 177. Then I take it. Right now, if you're in it, I don't see really a reason to sell it, because this is just going. Like, you just want to monitor this live because this is happening kind of live, but you don't from here right now, like, you don't want this to come down below 175, right? Like, if you're in this trade live and you start to lose 175, get out, because those contracts on the call side are going to get completely demolished, crushed, I would say. Even between 176, around 176, they're going to start to get crushed. But 175, they're going to be toasted. Just because I'm just telling you right now, this is volatility. You can see it changing live. Like, see this starts to move, those little squigglies. You have a heavy, the option premiums are outpacing the price action, basically, at this very moment in time. So you'd want to see this at some point, maybe tomorrow, come in and hold this area. But this isn't an active breakout, so you'd have to be chasing that upstart, man. Ooh. 54. That's a big deal. It's a big candle. Yeah, I mean, 40. Geez, $60. Here you go. Easy day. 60 buckaroos. I appreciate you. My favorite thing on Mondays too. All right. So Al wanted to look at SMCI. Let's do that. Oh, you're running a 20-day simple moving average. That's what that is. I don't think, or actually 50-day. I had that offset. Some people, for whatever reason, they don't use the 20 and 50 simple moving averages, and I have them locked in on a daily time frame. So I don't like this. Personally, for any direction, quite frankly, I think this looks like it's going to go sideways. It's a little bit too low. So like inside, so first of all, grab this 47.86 level. What you want to see, and probably this morning it looked like it. Maybe. No, it didn't. It didn't look like it. So I don't like it. So this is where you have to bounce like here now, literally hang up. And then I think this is maybe sitting out for later. So tomorrow, potentially, is this just it's at critical mass, right? So like you put this trend on, you absolutely grab this is called an order block 47.85. You absolutely need to throw this as a 50-day simple moving average, 50-day SMA, not EMA, uh, locked on the daily time frame, not the chart. And then you have a 20-day simple moving average locked on the daily time frame, not the chart. So this way I can flip around 30-minute time frame, 1 hour time frame, 3 hour time frame. See how these SMAs are always they're in the same spot on my chart now. That's what you want to see, right? So these are not moving at the moment. You're kind of holding this uptrend, but you're not. You're getting slapped right at this order block right here. So I would be somewhat cautious. Let's do it this way. So the dip buys would be here, 44s, this 20-day simple moving average, which is going to align pretty much with this order block right in here. That makes sense. I think this is building, but I don't know that it's ready. Is it ready? It's building to me. And so I'm just going to make this is a parallel channel. So this looks like a lot like Lulu. So it might start locking higher lows. It might even breach it for just a little bit. I'm down on a 30 now. I think it's like in this 45 area. It's more like my price of interest. Wherever it ends up being at that point in time. So this is a parallel channel that it may end up going, it might chop around for a little bit like this. You don't want to see a rejection at 47, right? That's not going to be fun. And then that. I like that type of entry better. And or you have it like this. We have a big breakout day and see this blue line. This is your 50-day simple moving average. And then you have it breaking over holding. But honestly, the 20 is down here. So that might not be for a while. It may just be an earnings thing. So I like it, but I don't know that it's explosive today, maybe later this week. But I do think this is areas where like you depending on how you play it, you look for dip buys somewhere in that 45 area. SMCI. I'll just say SMCI loves Fridays. That's 224,000 calls to 100,000 puts. Yeah, roughly 2 to 1. That's not like crazy to me. It's decent. A lot of sold upside calls. So 3,500 selling the 45 strikes. 1,600 selling the 48.50 strikes. Some buying the 72s. But in December. So I see a lot of December flow for this guy. They report earnings on October 29th. You know, SMCI, they look for that pre-announcement. So like maybe you get a pre-announcement. But yeah, it would have to be in this area. So like if you get a bounce here, that's great. I think you could take a shot like this here now. Not yet. I have to. So this is our opening range low right there. So like if you're holding over or below, which you're mostly just retesting it here. So I'd like to see it pull up. So this is how it goes, right? You get in the weeds. I'd like to see it come up here, come back down, hold, and then continue on for a back half press. That's what I would need to see on SFCI. Otherwise, a rejection in this area of 48 is not going to be fine because you're going down to 45. That's my view. That's my view. But as long as you're holding this, it's fine. You're good. But just know if you fail it, it's not fine. That's right. They might have been out already. They might have just grabbed it, boom, taken it. You never know. All right. Check in on our CRM. Market feels bullish. Market feels bullish. Jill. So at Tesla, we covered Tesla in the early part of this. I don't think Tesla goes anywhere for any considerable period of time. I think that this chops right in here. So I don't think this is gonna go over 230, basically. Can you get a bounce? Sure. But it'd probably be a short-lived one, and it comes back to 220. I think this is your low from this morning. I think this whole shelf holds the support firm, but it bounces like this. I mean, post earnings. I don't think this moves on earnings either. I think you have to wait till earnings is over for this to get any kind of legs underneath there. So that's where I am. It might even flush on earnings, but if a flush would be for like from 230 to 212, so it's not worth playing for me there either. But yeah, Tesla, stuck in the mud. Give her a couple weeks. Do not play her this month at all. Not at all, right? Or maybe even like next month, November, we can look at Tesla. But she's stuck in the mud. Big run in both directions. Now let her rest. You want to throw a condor on there? Absolutely. We did crowd. Oh, we didn't do monster. This is basically Bitcoin. Which we did do. Ooh, that's interesting. Did you guys see that? So Bitcoin holding MSTR not outperforming Bitcoin today. The Ponzi fails. Is that right? I don't know. That's weird. So it would. I think MicroStrat front ran the Bitcoin move because MicroStrategy was definitely outperforming Bitcoin for a hot minute. This whole thing made the move. Look at MicroStrat's at all-time highs. Bitcoin is not even close to it. So I think they're looking at this as like, okay, the premium is over. The premium's overplayed, quite frankly, which makes sense to me. I think it is as well. So I think this is wild. I think MicroStrat underperforms Bitcoin. You have to see it hold that 200, but I would expect that it pulls back a little bit and retests in here and then catches its feet again. And then kablooey. But I think this is just like a straight case of like you were outperforming the underlying Bitcoin this entire move. Now Bitcoin's time is here. Is your premium a little bit too much? You got the $200 psychological level to deal with. Yeah, I think this comes in a bit. I think this comes in under 200 because it doesn't make sense to me either why it would be that. Bye. Yeah, look at this. 14,000 volume on the 200-foot strike for a Friday. And a lot of these calls are sold calls. 250 strikes sold. Yeah. Somebody bearish. I wouldn't be that kind of bearish. I don't know what the hell they're doing. So anyway, went crazy on a very low strike. They're looking for Bitcoin to fail. I don't see that yet. But I think this is just a case of, look, the premium a little stretched, way outpaced Bitcoin on this bull move for sure. Even if the options, yeah. This is about HUD, especially if, right? because the longer dated options are more attuned to volatility. But anyways, look, if you have options, I mean, options are not investments; they're trading vehicles. If you want to invest in stuff, buy stock, which we do a lot. They're going up to the $40 strikes. What? $40 strikes for Jan 2025. That's crazy. It's just hitting like the highest. Jan 2026, $40 strike. Get out. Jan 2026, $40 strike for Robinhood. 3,700 volume on 6,500 open interest. All right. The Bulls are in town. That's crazy. Any thoughts on on? I don't really trade this one. Looks okay, but it's stuck. Whenever you lose a 20-day, it's not usually good. So it's at least going to this 45. At least you're gonna retest probably in here. Then slap her again. Cisco data breach. Yeah, no, I wouldn't really worry about it. Cisco. All right, boys and girls. Amazon. I mean, yeah. Amazon was just. I think SMCI is a good analysis for you guys. It's possible, but maybe not just yet. No go on Amazon. Yeah, every time it gets really close, it's a higher low and lower highs so far. That looks like a channel break. This doesn't look great. We'll have to see. It's probably going to be a higher low, like somewhere in this 84 area. It's a couple bucks. More time. Yeah, nice. All right. I think last one. We did do crowd already. Oh man, you guys went insane. Yeah, Amazon is absolutely the choppiest. I think we're looking. Keith, I appreciate you too. There was one. Where did it go? Snow. Living on the edge. Snow. Let it snow. You know what I'm seeing on stuff. I mean, yo, is this a short or what? Been extended. Living on the edge. I'm just saying. This bad boy closes under 1, 2, 3. We out. I will short this. Mm-hmm. I don't know if you were thinking short. Oh shit. Sorry. I gotta look at my NET. But here, Snowflake, really quick. This is crucial. 123. Absolutely crucial. If you get what I'm saying is if you get a daily close today below 123, this is going to fill a lot of this. It's probably going to lock in a higher low. But I would like to to take this back to the 50-day around that 117. Quite frankly, sorry, snowflake bulls. Look, there's no trigger for this yet. So it has to close on the lows lower than this morning's low. That makes sense? Close on the lows lower than this morning's low, which was 122.50. So I would, if this 122.50, she closes below 122.50, and it's really like right in here, this box through, and this entire volume shelf, currently acting as some kind of support defense. 123 is crucial. If she closes under this, then I would take this short a few dollars back to the 50-day. But otherwise, even if it closes above it, I wouldn't take it long necessarily, because if you want to be bullish on Snowflake here now, what you want to see is you actually want to see this create a net new base. So you want to see buyers step in and start buying it up whenever it gets there. So even like if it gets like choppy like this, you really, honest to God, you want to see this kind of start to set up for like a week and have this base, right? Like if you get this flushing all the way back beyond 120, it's not going to get, right? But I think this at least pops back into 120. And depending on how this goes down, this is the best case scenario right here. Literally, this is the best case scenario. And you're going to be looking for what's like a liquidity grab. But this only sets up if it's consolidated for a while. If it doesn't consolidate, then what happens is that you get this kind of push, breakdown, retest, and fail to 116. And then you're back into this area. And then you do that consolidation shenanigans over here, right? Which is an even longer base to form. But ideally, you consolidate at the highs if you want to be bullish. But this is crucial right in here. So you get this, I mean, maybe just to be safe, 122, something like that. I mean, it might be a trade, quickie, single session to the downside. And I'd be out pretty quick on this. But you get a quick move to 120. If you get an extension beyond that, let's say you get to 120 and you missed all this shenanigans and you finally say, hey, look, we're at 120 and we're coming back up, and you hit this 123 and it's like a ton of bricks, and then you lock in a lower high. That's another short. So you don't want to see that if you do get to 120. That's what you don't want to see. So just be aware. Any team is on edge for me. There you go. Started. So we're holding day. So in consolidation day, I want to see this guy so far. We're on it. High and tight. I want to see this closing continue to close over 93, ideally over this high right here. That's ideal. We had a little push this morning. Nothing I could really take profit on it so fast. But closing over that, I'm good. My caution or concern is that volatility is juice right now. So you might get them a little bit cheaper, but as long as it's holding form, I'm okay. Just okay. Looks like it looks good. Thinking long now. Yeah, so I gave you the two or three scenarios there. Yeah. Honestly, if it tumbles around for the next 2 weeks, I feel like that would be ideal if Bucky or the Winter Soldier or Snowflake can create a net new base above the last low. That's probably ideal. All right, guys, I'm gonna call it right there. I appreciate you all. It's been a long one. I'm gonna take a quick break and then I'll be back at it live in the server. Adios. Peace.